Hello and welcome to today's presentation on the Technology Business Tax Certificate Transfer Program, more commonly known as the NOL program. By the end of our presentation, you should have a good understanding for the program standards. First, we'll continue here with our brief introduction, followed by highlighting some recent program updates, then get into details around program eligibility. The NOL program allows qualifying technology and biotechnology companies to sell the offset to their New Jersey state tax liability, which is created by their accrued net operating losses and R&D tax credits. With this sales transaction, the losses are transferred from the selling company to the buyer. The NJEDA determines if an applicant company meets all the eligibility requirements to participate in the program. Benefit amounts are determined by New Jersey's Division of Taxation. They are based on the company's New Jersey corporate business tax filings. The program's annual timeline is as follows. The NJEDA makes internal preparations from the start of the year up until May, leading to the launch of the application. The annual deadline for all applications by legislation is end of day June 30th. Applications are then reviewed for approval in July through August. Final recommendations are presented at our September board meeting, if not October. Any application that is declined does have the right to appeal this decision. Those appeals take place in November and target completion by December. Once appeals are done, benefit approvals are distributed, and approved companies can look to close their tax credit sales transactions. All transactions must be completed with our closing department and taxation by April 15th. Regarding program updates, the maximum lifetime benefit a company can receive from the NOL program has increased to $20 million. This is the company's approved benefit amount, not how much cash they have received from buyers. Also, the program is subject to an annual cap. If the total amount of approved benefits for all companies exceeds this cap, all companies will be allowed to sell a portion of their approved benefit amount. But good news, that pool has increased to $75 million annually. All past exceptions to the program put in place due to the COVID pandemic are now over. Namely, to be considered as a full-time employee that fills a position in New Jersey, employees are required to work 35 hours a week and spend at least 80% of their time in New Jersey. Out-of-state employees will almost certainly need to provide additional documentation to verify they are coming to a New Jersey location and not working remotely out of state. The NOL program's fee structure has changed. The application fee is now dropped from $2,500 to $1,000, but there is now an approval fee. To close a benefit transaction, if approved, the fee is equal to 1% of the approved benefit amount. This fee applies to benefits greater than $100,000. The maximum fee is $20,000, and the application fee will be applied towards this approval fee. Finally, we covered the $75 million annual cap. This has a distribution formula if the program is oversubscribed. In the past, a $10 million allotment from the pool was reserved for companies located in innovation zones. Well, this is now increased. The reserve amount is $15 million. It also includes companies located in opportunity zones, as well as woman or minority-owned certified businesses by the state of New Jersey. Moving to eligibility. A company must meet the definition of a technology or biotechnology business. They must own or control PPIP, which is Protected Proprietary Intellectual Property. They must have been running at an operating loss for the last 2 years. They must employ less than 225 people within the United States, and they must have a minimum amount of full-time employees working in New Jersey. Additionally, all employees must be offered a health benefits plan. On the next slides, we'll go into this in greater detail. For a business to be eligible for the NOL program, the company must have a physical location here in New Jersey. They must own or control PPIP, and this PPIP must be primary to their business. You'll see here below the definition for each type of business, biotechnology, or technology that a company must meet. PPIP comes in three forms. The first is a patent. The patent must be somewhere in the approval process from a submitted application and review through denied and being appealed. A 1-year provisional patent is acceptable. The patent must be active. It must be assigned to the company. The second form of PPIP is a copyright registered with the Library of Congress. This namely applies to software. The copyright must be on the company's product or intellectual property. The last is an exclusive license to a patented or copyrighted technology. This license must be holistic to all aspects of the technology. Importantly here, what is not PPIP? Trade secrets, trademarks, copyrights on just logos or characters, exclusive agreements like sales or distribution that are not holistic to the full technology. Also, licensed software like Windows, Oracle, or similar does not make your company eligible and is not considered PPIP. Another major eligibility requirement for the NOL program is that a company has had no operating profit for the last 2 years. A company needs to provide financial statements to verify this. The statements must be produced by a CPA according to GAAP. Reviewed, compiled, or audited are all acceptable forms, but they must have all three statements: balance sheet, income statement, cash flow statement, plus any notes or any other reports required by your CPA. Additionally, the first page cover letter report statement from your CPA must be included. 2 years of no operating profit, as well as providing financial statements, is also required for any company that owns 50% or more of the applicant company. Eligibility criteria regarding employment. An applicant company can have no more than 224 US-based employees. For an applicant company that has another company with a parent or subsidiary relationship, so 50% or more ownership or control exist, the employees for the parent or subsidiary company will be included to the applicant company's total. Additionally, the applicant company has a minimum number of employees required here in New Jersey. These minimums are 1 full-time New Jersey employee for a company less than 3 years in existence, 5 full-time employees in New Jersey for a company that is between 3 and 5 years in existence, and at least 10 full-time employees working in New Jersey for any company older than 5 years. The minimum New Jersey employment amount is based on a company's years in existence. That measurement begins with the company's earliest formation date and is measured against the deadline date of June 30th. A company that was formed as an LLC in 2002, then incorporated in 2020, this company is 20 years old, not 2 years old. They will need 10 employees in New Jersey to meet that requirement. Specifically, what is a full-time employee here in New Jersey? It's an employee that works 35 hours a week, receives compensation subject to taxes, namely withholding. They spend 80% of their time or more within New Jersey, and they are offered health care coverage. They're not required to take it, but the company must offer it. More importantly, what does not meet these requirements? 1099 employees, consultants under a service agreement, interns and temps. These folks do not meet the requirements. Additionally, PA residents are not included in the New Jersey minimum total. So a person that works in Trenton but lives over the bridge in Pennsylvania, they cannot count towards a company's New Jersey full-time employee total. An application to the NOL program must be submitted through the NJEDA's online application system. This is available via the NOL website. There is a $1,000 non-refundable application fee. The deadline for all submissions is June 30th. After June 30th, the applications lock. This includes applications in process. All required documentation also must be submitted to the NJEDA by that June 30th deadline. Any missing required documentation cannot be accepted after June 30th. We can take clarifying information to a document that was submitted prior to the deadline date. Our advice, submit early before the deadline if possible. To estimate a potential benefit from the NOL program, here is a sample calculation. For an accrued amount of $5 million in losses, the tax offset comes from multiplying the loss amount by the max New Jersey corporate tax rate of 9%. If the total of all approved benefits for the program year is less than $75 million, which is the cap, the full amount will be available for the company to sell. If oversubscribed, every company will get to sell a slightly reduced amount of their benefit total. Again, the benefit is sellable. This is how the company would turn it into cash. The benefit sells at a discount. The program requires they sell for at least 80 cents on the dollar, but usually this price ranges from 88 to 92 cents based on current market demand. We would note, in the application, a company must enter their loss amount and R&D credit amount by year. Do not aggregate. This was just an example to help frame an estimate benefit. As previously noted, the program is subject to an annual allocation of $75 million. If the program is oversubscribed, which means the total of all approved benefit amounts for all approved companies exceeds $75 million, there is a multi-step distribution formula. Every company will get to sell a portion of their approved benefit amount. The distribution is a waterfall between two pools. The first pool is $15 million and distributed among companies located in opportunity zones, innovation zones, or are certified by the state of New Jersey as woman or minority owned businesses. If this pool is exhausted and companies remain, they'll move into the general pool with the other companies for distribution. If all companies receive their full benefit amount, then the remaining funds are added to this $60 million general pool for distribution. Approved and closed benefits can be recaptured. This would take place if a company leaves the state of New Jersey within 5 years of closing their benefits. The exception is if a company goes out of business. Benefits are not recaptured if a company no longer meets eligibility requirements after closing. Full information on the program is available on the NOL website. There is the application, as well as valuable resources like the program at a glance, frequently asked questions, the official rules for the program, and a list of documentation that is required to be submitted with an application. This concludes the presentation for today. Any questions not addressed by the presentation or the NOL website may be sent to the NOL email address listed here. Thank you for your attendance.